There were a few significant changes in the big tax law passed earlier this year, which is making 2025 the year to do tax planning around charitable giving. That's what we're talking about. Let's get going. Now, to kick this off, there were actually quite a few changes in the tax law affecting the deductibility of charitable gifts. I'm really going to focus in on two today that have a larger impact, generally speaking, on people with high income, especially those in those top tax brackets. Now, that being said, we've had such a tremendous run in the stock market over the last 3 years. Folks that usually aren't in those top brackets might be finding themselves there if they've been selling some stock, or maybe they've had restricted stock vest that they received through an employer, or any type of stock compensation which might be pushing them up in those marginal tax brackets. So the timing of this discussion looks pretty good. Now, the key thing is these two changes in the tax law, which I'm going to highlight, do not take effect until 2026. And thus, if you're looking to do some tax planning or a tax strategy that involves charitable giving, I'm going to illustrate why 2025 is the year to get that done. Now, the first change I want to highlight affects anyone who takes an itemized deduction. Okay, that would be in contrast to folks who take a standard deduction on their tax return. Basically, the new rule says any charitable deduction you take has to exceed 0.5% of your gross income. Now, look, no one's going to follow that, so let me just give you an example. We're going to take Charlie and Nancy, and we're going to use them as we look at a couple of examples here when I get into the second provision that changed. But in this first provision, we're going to assume that Charlie and Nancy are a high-income earning couple. They're expecting $900,000 of gross income, and this will become more relevant when we get into the next thing we're going to talk about here today. But here's what the rule for 2026 says. Okay, the new rule that's coming into effect says that any charitable deduction that Charlie and Nancy take must exceed 0.5% of their gross income. So, of course, 0.5% of 900,000 is $4,500. Okay, so if they make a charitable gift of $4,500 or less, they're going to get no tax benefit from doing that. Likewise, if they make a $10,000 charitable gift and want to itemize that as a deduction on their tax return next year, well, the first $4,500, which again is 0.5% of their gross income, is not going to count for anything. So that $10,000 charitable gift is only going to provide them a $6,500 charitable deduction. So again, this new rule, which comes into effect, affects anyone who itemizes on their tax return. Now, the second change that I want to highlight today also impacts folks that take an itemized deduction. Okay, this also starts next year. Basically, it limits the impact of itemized deductions for folks that are in the top marginal tax bracket. Now, to show you exactly what I mean, let me throw the tax brackets for 2025 up on the screen. These are for ordinary income rates. We have the income thresholds for individuals in the left-hand column here, those for married filers in the right-hand column, tax rates in the center. Okay, you can see the top tax bracket is 37%. Okay, what this new tax law is going to do beginning next year, it's going to limit the benefit of tax deductions to 35%. Okay, so even if you're in this top tax bracket, if you're itemizing when you file your tax return, the impact is going to only benefit you as if you were in the 35%. Let me show an example to illustrate how this works. Now, let's just carry our example couple forward, Charlie and Nancy. So imagine again, they have $900,000 worth of gross income. Let's say their only deduction for the year in 2025 was a $100,000 charitable gift that they made. Okay, so that's going to lower their income by $100,000. Well, because they're in that top tax bracket, 37%, that's going to drop their income from $900,000 to $800,000. They're still in the top tax bracket, but now they're not paying 37% taxes on $100,000. And thus that deduction to them is worth $37,000. Okay. Now, I'm going to throw the tax brackets up on the screen here again. Next year, that law change is going to limit itemized deductions for people in that top tax bracket to 35%. Okay, so even if you're up here at the top of the brackets or in the highest bracket at 37, deductions are only going to have a 35% impact. So another way to envision this, or to visualize this, just a simple table. $100,000 worth of deductions in 2025, again, worth $37,000. Next year, for someone in the top tax bracket, that same amount of deductions is only going to be worth $35,000. Now, finally, the two things we just highlighted stack on top of one another, okay? And thus, that is why 2025 looks so much more advantageous if you're looking to take a big charitable deduction as opposed to 2026. So one last example here using our couple, Charlie and Nancy. Again, assuming they expect $900,000 of income this year and perhaps the same next year, how would a $100,000 gift compare in 2025 to 2026? Well, I'll throw a table up on the screen to illustrate. As we've already emphasized or highlighted, $100,000 in deductions in 2025 is going to save them $37,000 in taxes. But next year, if they took a $100,000 charitable deduction, first and foremost, they have to get over that 0.5% of their gross income. That's that hurdle that we talked about. And thus, that means the first $4,500 of any charitable giving they do does not get them a tax deduction. So we have to net that out, which means $95,500 gets to their tax return. But because they're in that top tax bracket, the 37%, they're limited to only a 35% effect, which means $100,000 of charitable giving in 2026 is only going to save them $33,425, in comparison to the $37,000 that it would save in 2025. All right, we're wrapping the conversation up today. Obviously, these significant changes around itemized deductions and charitable giving specifically are making 2025 look like the year if you're going to implement a tax strategy around charitable giving. Don't forget, donor advised funds also can come into this whole discussion if you want to pre-fund some charitable giving that you might do years down the road. I tell you what, I'll make sure I link on the end screen here to a separate video I did talking about donor advised funds, which are one of my favorite tax planning tools that I've worked with a lot of clients on. If you need some help, head over to my website. Please feel free to reach out to me. And of course, as always, thanks for watching. We'll see you in the next one.